Hey everyone, I'm Tony with Clarkson Santoro, and this is our weekly real estate update for July 1st. In this weekly series, we update you on the latest real estate trends that are occurring in our market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner or as someone who's looking for a house that you will love to call home. The current inventory is 101 homes, down from 107 last week. The average asking price of those homes was $2,072,000, which is down from last week's average of $2,097,000. 15 homes asking an average of $2,186,000 went pending this week. That is more pending homes than last week's number of 4, with a higher average asking price from last week's $1,734,000. A total of 7 homes sold this week, with an average sales price of $2,092,000. That average price was up from last week's average price of $2,063,000, and the total number of sold homes was lower than last week's 11. Now that we've seen what the market did this week, we also like to look at 6 broader trends that help us understand the strength of the San Ramon market, and more importantly, give us a context on how the market is changing. The first 4 indicators give us a look at the quantitative numbers, which tell us what the market is doing, and the final 2 indicators are more predictive of where the market might be headed. We rate these trends on a scale of 100, where 50 indicates a neutral market, not favoring a buyer or a seller. The higher the number, the better for sellers. The market has been in a buyer's market now for several weeks. Let's see how the trends look moving forward. The first indicator that we look at is our housing inventory levels. The number of active homes on the market has been climbing steadily since May 4th, but for the first time in weeks began to decline in number, falling to 101 from last week's 107. The decline in our active inventory is welcome news for a market that was experiencing steady increases for the last 2 months. We'll be watching this number closer in the coming few weeks to see if this is a trend back to a more moderate number. Last week, this indicator received a score of 20, signaling a strong tilt towards the buyer's market. This week, we give this indicator a slightly higher score of 23, reflecting a small turn toward a more normal market. The inventory turnover rate is one of the best gauges to judge the health and strength of the market. Over the last year, the market turnover averaged about 2.4 times a month, but it dropped below 1 on May 21st for the first time since 2019. A turnover rate of 1 is usually considered a neutral market, neither favoring buyers or sellers. Today's average turnover improved just a little to 0.37 times, an uptick from last week's turnover rate of 0.27 times per month. Last week, this indicator received a score of 20, leaning strongly in a buyer's favor. This week, we give this indicator a slightly higher score of 23, indicating a small improvement in the market. Next is the amount paid over the asking price, and it is another great barometer of the market strength and depth. Since May 23rd, we have seen the amount drop from $310,000 over the asking price to today's $96,000, using the 30-day rolling average. This is still a nice amount over the asking price, but it is $40,000 lower than last week's number. If we look at the more recent 7-day rolling average, this dollar amount over the asking price has fallen to just $35,000 last week. But this week, the over the asking price amount improved to $75,000. As I mentioned in last week's update, sellers should now price their homes at a close to the market value price and not expect a bidding war or receiving much over the asking price. Last week, this indicator received a score of 60, and this week, we will give this indicator a slightly higher score of 63. The amount paid over the asking price is still very good, but it's important to keep in mind that these numbers reflect what the market was doing over 30 days ago. Closing sales in the coming weeks will tell us how much this market slowdown has affected prices. Sales prices based on the 30-day rolling average have been declining since May 24th, when they hit an average of $2,396,000. This week, the closing number was $2,105,000, which is $76,000 below this year's average closing price, which is $2,181,000. It appears that prices have peaked and are declining a little bit. Last week, this indicator received a score of 80, and this week we are lowering the score a little to 75, reflecting that we are experiencing a small but steady decline in property value from this year's high. One of the two predictive indicators that we follow is the Invesco QQQ Stock Fund. It tracks the health and valuation of the high-tech stock market, and we have watched this number drop from a high of 401 at the beginning of the year to as low as 271 a few weeks ago. The fund has improved back up to 280, reflecting a small change in a positive way. There are clear signs that the Silicon Valley economy is under stress, and there's talk of reducing their risk profile, which usually means reducing hiring and lowering expectations. If the Silicon Valley economy cools, we will see the effects here in the Valley, as most of our buyers from the last 2 years came out of the Silicon Valley area. Last week, this indicator received a score of 33, and this week we are leaving the score at that same number. The last indicator we follow are interest rates, which have been climbing since August of 2021. The rates at that time were only 2.84%. 3 weeks ago, rates dramatically jumped up more than 0.5% to 5.75, and today they are down just slightly to 5.7. However, it appears from comments made by the Federal Reserve that the long-term trend of higher rates will continue for some time. Last week, this indicator received a score of 35, leaning towards a weaker market. This week, we give the indicator the same score. In summary, the most current metrics and indicators show a market that has changed from a strong seller's market to a strong buyer's market in less than 6 weeks. The good news is that this week we saw inventory levels decline by about 7%. In addition, seeing a nice jump in the number of pending sales from about 5 per week to 15 this past week. Last week the overall score was 30, but this week we are gently raising it to 32. We will be watching the market carefully to see if the rebound in the market strength is a new trend or just a momentary flux. I hope this weekly summary and commentary helped you understand our market better and how it's affecting you. Let me know in the comments down below or contact us directly if you have specific questions about how you can navigate this market to sell or buy a home. And if you find this information helpful, share it with a friend, hit the like button and subscribe so that you'll always be up to date on the latest real estate news here in San Ramon. Have a safe weekend and we'll see you next week with a new update.